Let's start commodities now, which are awaiting the second important data of this week, and that really is the US payrolls numbers in the evening today. And ahead of that, there is a bit of choppiness into the market. Some bit of a buying on your screens coming in for precious metal space. Remember, the gold prices had touched a 3-week lows yesterday at around 1296. 1310 is back onto that counter. Silver prices also trading nearly 0.2% on the higher side. The energy space in the meanwhile continues to trade with a difference. You have seen the NYMEX crude prices gain up a bit, but the Brent crude prices have continued to trade below $104 a barrel. As far as the base metal prices go, well, the strength in US dollar is something that's weighing onto this space as well. Let's get in then. Kunal Shah, Head Research, Nirmal Bang Commodities, and he joins us live on the show. Kunal, hi, welcome. Let's start with the precious metal space first. And while we have seen choppiness continue into that one, and it really seems to be testing lower lows as the days go by, how are you looking at the gold and silver prices now in the Indian markets as well?
Tonight we have a very important payrolls report which is going to come out of US Economic Data Forum, and we believe that this report can be slightly more disappointing than the consensus. So hence we feel that at least for a day or two one should not go short in bullions. And as far as gold is concerned, 29,900, 950 good levels to go long, with an upside target of 30,200 to 50, and one should place a stop loss at 29,750. So because of the payrolls report, we feel that gold prices are going to remain supportive for the day.
Let's get the dollar index on the screen as well, because that also has seen constant gains coming in, Kunal, 80.90 almost. So we almost need to be nudging to that 81 mark. Do you think the strength in dollar would put some pressure on precious metals? And also, what's your sense coming in for the silver prices now?
Yes, quite rightly pointed out, the dollar index is continuously strengthening after the ECB rate cut yesterday, and going forward also we expect dollar to strengthen further. So overall view for the gold is still not at all bullish, but just this kind of events, any number which is coming, say for example if unemployment is 7.3, 7.4 today, then you may see a major buying coming into gold at least for a day or two. So because of this reason we recommend buy, otherwise there is no reason to go long in gold, because the US 10-year bond yields are shooting up every day. The dollar is strengthening from 78, 80, we are seeing already 81 levels. So structurally we remain bearish, but it's just the intraday perspective we are giving a buy call.
What are you seeing in sense of prices and the divergence that we are seeing in case of the NYMEX and the Brent right now?
Yes, as far as the dated Brent is concerned, if you look at as a benchmark Brent oil, what everyone is looking at, especially the Asian markets, the Indian markets, we look at the Brent prices. But practically speaking, it's a flawed benchmark, because every year you are continuously seeing a major drop in Brent oil production. So all the other benchmarks like Dubai, Oman, which is a part of the Indian basket, the prices of that is derived out of Brent. It doesn't make sense to give so much importance to Brent, because if you really understand the fundamentals of Brent crude oil, it is never going to remain bearish, because the production is dropping very rapidly, the entire oil basket across the world. So out of the 90 million barrels production, Brent crude oil is not even 1% of the total oil production, and hence also we are making Brent benchmark. It doesn't make sense to say a bearish view on Brent, but at the same time there is a global glut in the oil market because of the US oil production have risen by 2.4 million barrels per day in last 2 years. So because of that, we are of the view that eventually the WTI prices is going to correct further, and the overall trend in crude oil is definitely going to be very bearish.
What's your sense coming in for the natural gas prices, because the energy products have seen some kind of a support continuing for the most of this year?
Natural gas, there is a supply glut, but at the same time, because US winter season is going to start, and the forecast which comes is that you are going to see a much cooler winter this year. So because of that, in spite of the glut in the natural gas market, we feel that these are the levels where gas can see a rebound of 5 to 6%. So 220 is the level where one should go long with a stop loss placed below 214, and expect prices to move up and test levels of 228, 230. So slightly bullish on natural gas for the short-term perspective.
Very quickly, Kunal, what's your sense coming in for the base metal space as well? Because this space also would be looking out at data that would be released in the evening today.
Yes, more than the data evening, today, tomorrow and day after tomorrow, 3 days you have a meeting at China of their political party, and how the reforms are going to take place, that will decide the future of the base metal. But I'm of the very firm view that whatever comes out of this meeting, copper is going to remain under pressure. So 452, 453, good levels to go short in copper with a downside target of 442.
All right, Kunal, we'll let you go at that. I appreciate you joining us with your strategies. That's the view coming in from Nirmal Bang. Then they are buying into gold and natural gas, but selling into copper for the intraday market there.